Good morning and welcome to Market of the Moment. I welcome you guys to this Thursday's edition, and we are really excited. I had a whole plan. They're all laughing at me right now because I messed up on my plan for the Go Live countdown, and so I am now changing my privacy settings right now, and a lesson has been learned here as well. So. So again, thank you guys all for joining us for this week's Market of the Moment. I am really excited to welcome Mr. Paul McFarlane and Tony Preston of JPAR. Is it JPAR Vantage or JPAR Associates? I never.
JPAR Vantage.
JPAR Vantage. Okay.
Yeah.
So we are going to be talking commercial real estate in a few minutes with those guys, and we're going to come back and do a real introduction with them here in a minute. But I also want to welcome Miss Annette Hunt, who is filling in for Amber Kavark this week. Annette, thank you so much. We appreciate it. And we're a little ways away from the mortgage update, but for those of you guys who haven't watched us before, whenever Annette's on, she lowers interest rates almost every time.
That's awesome.
So she's earned the nickname of Annette Almost Free Money Hunt. So we always enjoy when she's on. She puts a lot of pressure on Amber each week as well. That Amber needs to get those lowered also. So, so Annette, thank you.
Thank you.
All right, and we are also joined by Ms. Mindy Jones, the owner of the Amy Jones Group over at Keller Williams Integrity First. Good morning, Mindy.
Good morning, everybody. Good to see you.
And I don't know if you saw the little tidbit I put on our post, but there's rumors about there being a little bit easier to buy a house this week than it was last week. So
I may translate that a little bit differently, but yes, okay. We have a little more inventory.
All right, excellent. So we'll be looking forward to that update here in a little while. And also the Vice President of Sales for Fidelity National Title, Ms. Sharon Tahoon. Good morning, Sharon.
Morning. Good morning, everybody. Happy Thursday. Excited to talk real estate on commercial side a little bit today. This will be fun.
I know, right? We're changing gears a little bit. And, you know, I was recently visiting with Tony and Paul over at their office, and we got in this conversation. I was just like, oh my gosh, we have to have you guys on Market of the Moment. And so this is probably 3 or 4 weeks ago when we were talking about, the commercial stuff in general. So, Paul, you are the broker for JPAR, correct?
Correct.
Yeah. So Paul is, he's the master of many things over there, but the commercial side is an area where you've spent a lot of time in the past as well.
Yeah, primarily from the management side of things. I've been in real estate for dating myself. November will be 20 years now. So I've seen many markets come and go. I actually started in New Jersey. I've been out in Arizona now for 14 years. I came out in 2006. So that was right before things started getting really crazy out here. So I've seen the real estate market ebb and flow like nobody's business. So needless to say, it's been a learning experience on all fronts, both residential and commercial. As well as from the management side of things. At 2006, when I got out here, it wasn't uncommon to find a single family home for rent under $1,000. And nowadays, good luck finding that anywhere. The same thing applies for commercial as well, especially in today's market where landlords don't want to lose their tenants. And I think we've all seen from COVID and the transition of people utilizing streaming services like StreamYard and Zoom and what have you. With people working from home, there has not been a significant decrease in productivity. And therefore, a lot of business owners are reassessing their business models right now to see how they can capitalize on this by either canceling leases where they currently are in their current places, or creating more incentives for anybody who is looking for either office space, industrial, to try and get tenants in there and keep them in there. Because obviously it's the tenants that are covering the notes on these properties. So we're trying to make it as enticing as possible to keep them engaged and keep them in their spaces.
Excellent. And so I have a couple of comments, Paul. So one, if you've been doing this for 20 years, you must have started when you were like 7.
Actually, I was 5.
Okay, good. Yeah. And secondly, I want to make sure because so JPAR is, you're not brand new to the Valley, but you're newer to the Valley. And as we're having this conversation today, we're focusing on the commercial side of things. You guys are a full service brokerage. You guys do residential, and you guys have great residential agents in your brokerage as well. So I just want to make sure as we're having this conversation that we don't pigeonhole you guys into just commercial.
Fair enough. And yes, and thank you for that, Don. We've prided ourselves on having a collaborative model within JPAR Vantage. So our residential agents talk to our commercial agents talk to our property managers are talking to our association managers. And just from this call alone, everybody can pull little tidbits from everyone. And not only that, as you mentioned, Don, a few weeks ago, just stopping in the office and having a very simple conversation that led into commercial, building that synergy gets people thinking, and also gives people the ability to potentially tap into their database to say, hey, I didn't know this was going on in commercial, but I have a friend who has a friend who is interested in getting some office space. And that's how business churns within our brokerage. So that's been very beneficial for us for staying true to that collaborative model within our brokerage.
Excellent. So I want to make sure I also get Mr. Tony Preston on here. So Tony, I've known for probably, going on 4 or 5 years now, Tony, and you've been in commercial real estate for all that time, and you were part of this conversation a few weeks ago in your office. And it's funny, as we were talking, and we were talking about different categories and different areas of commercial real estate, it really kind of got my mind turning as like, I didn't think about all these things. So first, can you help us to understand what the different categories are of commercial real estate? So can you help explain that?
No, absolutely. So commercial real estate is broken up into several different principles. So you have your different sectors like industrial, you'll have office, you'll have multifamily, hospitality, special use, so on and so forth. And then there's sub-classifications that go on there. So you'll have dental offices, medical offices, you'll have other types of office subcategories and different types of industrial categories based on zoning requirements and so forth. And so there's all these different areas that are built for businesses to operate in. And so it's with COVID, like Paul was saying just earlier, we've seen a lot of different types of impacts happening within the commercial sector. Some people are on edge, depending on what sector you're in. Some people are loving life because, and that was kind of part of our discussion was just kind of like going into industrial. It's kind of like the housing market is right now out there, in that industrial, there's not enough space that's been built out there. There's not enough starts.
Time out for 1 second, Tony. Can you describe what industrial is?
Sure.
So yeah, so we see a lot of big warehouses. We see this stuff when we're driving down the 202. But I don't know what that special use is versus industrial. So can you kind of give us a definition?
Sure. Yeah. So there's different types of industrial spaces. So you'll have kind of which is your flex spaces, which are going to be kind of like your smaller. So it's going to incorporate a small office and a small warehouse. So probably between 1,200 to 2,000 square feet. They'll have a small office footprint, mostly warehouse. Some people operate retail out of those, and that's why they're considered flex spaces. Then you'll go into other classifications, and it goes in line with zoning. So different types of zoning classifications within the industrial sector, for example, it allows different types of permitted uses and different types of companies to operate. So companies that are operating with chemicals, companies that are having 24-hour production lines, those are all kind of noise classifications, and how they disrupt the communities around them. So obviously the different types of industrial classifications is going to go within zoning. So and then you have like along what you're saying along like the I-10 corridor out there in the West Valley, You have a lot of distribution because that's the connection point from California or the coastline where most of the trailers are being dropped off and being shipped out from those destination locations there, and then go out to, wherever they're going from there. So yeah, there's a lot to it. I'll try and be as, hopefully that's a simple explanation.
Yeah, that's great.
A complex question.
Yeah, no, that's great. So what you were, before I interrupted, you were talking about how that area is a part of the commercial landscape that is super hot right now, much like the residential.
Yep. Yeah, we're seeing bidding wars. We're seeing properties, certain industrial buildings, that are, between 10 and 30,000 square feet going on the market first day and have multiple offers on that first day. And, prices being bid up. And so if you're an industrial owner and you're wanting to sell, now is probably a good time to maximize the value that you can get out of your property. And they're anticipating that there's not going to be any changes to the industrial market just because of the shortage of inventory that's available out there and the amount of new starts and new constructions for new space to come out there. We have a big demand right now. We have a lot of businesses moving out here to Arizona because we're a little bit more business friendly compared to some of our neighboring states that have some really strong impacts, from a taxation standpoint to regulation standpoints that put a lot of constraints on businesses and allows, and they're not able to grow. A lot of businesses are looking to move out here to take advantage of the labor pool that's coming out here, which is great for Arizona. But it also goes into Mindy's part of her conversation on why we're seeing such a huge strain on our inventory out here is we have more buyers than we have inventory. And so that right now, from all the analysts that we're talking to and everything else that's going on, there's not much anticipation change there. And how that impacts commercial, because commercial follows residential. That's one of my common themes as I talk to people. We have to closely watch what's happening in residential because that's going to help us dictate what's going to be going on the commercial side, because retail follows rooftops, office space and the different types of classifications of office space that are being heavily impacted right now, like your Class A spaces, as these large corporations that have a remote workforce now, they're rethinking their footprints. And so you're seeing a lot of large organizations, they're renegotiating their leases right now. They're going into a smaller footprint because they realize that they're just as productive by having people work at home. The great thing about office is it promotes collaboration within the departments and gets people to communicate, which in turn should create more production. But with Zoom and everything else that's out there from a communication standpoint, you're seeing businesses really rethink of how they're going to go about their office footprints in the foreseeable future. So there's a big question mark on office right now. We know, there's surveys that have been going out that a lot of the workforce would like to go back into the office, but what does that look like in the future? So there's a lot of guessing going on right now. No one has the crystal ball, but we anticipate some strong impacts on the office market. The smaller office market, like your smaller size, small businesses, like your local insurance, your dentist office, there's not going to be much impact there to a certain degree. Because they're serving their local community. So we won't see, I don't think, as much change in those sectors. It's mainly like all those large construction jobs that you've seen where you see all the cranes out there in Tempe right now. Those investors got to be feeling a little bit nervous right now because there's a lot of square footage that's out there. And so we're seeing we're anticipating net absorption at a negative for the office sector. Retail, there's some question marks there too as well. There are certain performing assets on the retail side. So, retail has strip centers, then it has your regional malls, and it has your supermarkets, and there's all these other classifications for retail. But certain sectors of the retail are pretty strong. So grocery anchored developments that are out there, those are very competitive. If it's a performing asset right now, investors are trying to gobble up things that are going to make their money work for them. And so, we're seeing that across the board, even on our office condos that exist out there. We're seeing a lot of pent up demand from the investor side of the market because I think there's some uncertainty that exists out there, and people are looking to place their money into hard, tangible assets, which is what makes real estate so great, is that tangible asset that you can put money in that will yield you a rate of return. And granted, a 6-7% rate of return is not a bad rate when you're only getting 0.001% at the bank level.
Yeah. So Paul, maybe you can answer a little bit about, like, so I know in my own things my own observations. So our corporate office is off of Raintree in the 101, and we've got a nice space over there. There's a very large lender in that space as well, which they have a floor and a half, and then there's somebody else in the third floor. And so when we first moved into there pre-COVID, we'd come in and like the parking, it was rough to find a parking spot unless you had to go over to the parking garage and do that. Now it's almost empty, the parking lot all the time. So you pretty much get your choice of parking spots when you go there, because all those people, especially with that lender, are all working remote. And so what do we expect? Like, I mean, I know it's hard to know anything for sure. I mean, if 2020 has shown us anything, it's, that surprises are abound. So, but what do the people, the powers that be, what do they think we will be seeing here coming of those spaces? Do we think there's going to be a surplus of that type of office space?
I think there's a strong anticipation that we're going to see a strong surplus of that. So we're going to have a negative absorption rate in those office spaces. Talking to some friends within, that are working in large organizations, their teams now they're all throughout the country instead of being in one location now. And they're communicating strictly over Zoom, or they're more secured platforms that they're utilizing. But they're realizing, most corporations right now, your large ones, are realizing that that office footprint is not necessarily as important as what they thought it was. So there's certain companies out there that have really dramatically have reduced their footprint, and these are companies that have occupied large spaces of office space that exist out there. So I mean, office has some strong impacts. The jury's out on that right now. There's no crystal ball. There's just, it will come back. We know that it will. It's, the office is a very important place for people to work, because it's that collaboration of things that you just don't really think about. And technology, as great as it is, it also has a disconnect from a human element. And so us being humans and not being able to communicate in the normal fashions that we would in collaboration, I anticipate that you'll see some of that come back. When that comes back, I don't know, but it's going to bounce around.
Mm-hmm.
Paul, do you have any, is there any other insights on that? Like, are we seeing certain industries impacted more than others? We've seen, like, down there by Tempe Town Lake, all those office buildings, huge office buildings that have gone up over there.
So in the ideal world, what I think would happen, I think we've seen a lot, especially on the political front, that there are pushes about redeveloping infrastructure. Behind that is that a lot of commercial spaces, commercial buildings, is what is utilizing a lot of the power on the grid. What I do anticipate happening in the near future, is that between architects, engineers, and developers, they're going to have to get more creative with reducing their energy footprint and providing those incentives to tenants that are going to be occupying these spaces. So they're going to have to start promoting more green, energy efficient office spaces in order to create the demand for people to want to come back and actually utilize those spaces. When that's going to happen, I mean, I'd like to say in the very near future, but if I had that crystal ball and could predict that, I would be a multi-billionaire and be sitting on an island somewhere. So, but I do think that is going to be the future, where commercial owners, developers are going to have to get more creative with providing more incentives through making their buildings more green and more energy efficient, and promoting that to the future workforce, which is going to be the millennial workforce that's going to want to be utilizing these office spaces.
How appropriate on Earth Day that that's the conversation. So,
brought it full circle, Don. Brought it full circle.
Right, I like it. I like what you're doing there, Paul. Mindy, did you have a question?
Yeah, I love this conversation. Obviously, I look at it through the lens of residential real estate and the clients that we have who are constantly trying to make predictions and connections between things, right? I mean, sometimes I joke that they'll say, my window in my car is broken, my car is not running. And you're like, well, those two things don't have anything to do with each other, right? But it's because they're trying to grasp that, what can they predict? Where can they feel safe? How can they know what's happening in the future? And the commercial space plays a big role in that, because obviously we're always talking about jobs, and we're talking about all the businesses that are moving to the area. And down in Chandler and Gilbert, we haven't really seen much change. The people that intended to build new footprints built new footprints. The people that intended to expand their spaces have expanded their spaces. You touched a little bit on which industries are feeling it more, and that's a big question that we get asked. I think the other two that I wrote down that I get asked quite a bit is, one, do you see people repurposing that space? So whether it's changing the configuration after they just changed the configuration for COVID, are they spending money to go back and change it into something different? And or are they using that space to be residential / commercial? And do we anticipate seeing more of that, whether it's in the malls or in the big areas of big developments down by Tempe Town Lake? Like, is that what we expect some of that to be or to turn into?
So great questions, because those questions are always being asked. Yes. What I think is you're going to see a lot of different types of creativity to make things work. Obviously, with a housing shortage, we haven't even touched on land right now. Land is another market that's extremely hot right now, because obviously we are underdeveloped right now from a new start, from a home start construction basis. So we're seeing a lot more development on that. You're seeing a lot of C2 zoning in certain districts get rezoned and repurposed for high density type residential based products. Certain municipalities and towns and so forth that surround us don't want certain types of multifamily products. So now you see the creativity of people bringing in retail and then sitting residential on top of it. So you're going to see a mixture of how they're going to be able to make real estate work. And to Paul's point too as well, you are going to see a lot of big pushes towards the energy efficiency. Because as an owner of any type of a asset class like that, like your largest expense is utilities, and so to reduce that footprint is only putting more money back into the investor's pocket. Now, granted, it's expensive to do a lot of those types of development, and so it's the credits that are going to be available out there that's going to promote investors to actually spend their money into those energy efficient areas. But like you're talking about on the retail side, I mean, especially in the East Valley and the West Valley right now, retail follows rooftops. And so if there's rooftops there and there's a lot of action happening, like your Gilbert, Chandler areas right now, you're not going to see that big of an impact on the retail. It's the malls, I think, they're going to have some struggles there. But a lot of your neighborhood retail type centers or even your open air mall concepts, are going to be a little bit better off than like your traditional mall type settings, as you can kind of see that, we no longer have a Fiesta Mall. We have a Superstition Mall that I don't know. And so a lot of that, some cities have been very smart, and they've, as those mall developments have happened, is that they set aside redevelopment monies. So that land could be repurposed at some future point. The problem is when you have ownerships in these types of facilities and in certain, let's take Fiesta Mall as an example in Mesa, I think you have 4 or 5 different ownership groups in there. And how do you get 4 to 5 different people with different business objectives to make a common business decision? It gets to be fairly difficult to do that. So you'll see things kind of stall off until someone can kind of come up with something creative. And so it's those people out there, it's those investors out there that are going to be the shifters of the market with creativity, is how they're going to be able to make something work and maximize the profit. And so everything in the commercial space is built on based of, it's an investment. There's a return aspect that's involved there. There's a lot of different strategies that of how you're going to make an investment work for you. So, I mean, yeah, to your point, you're going to see some repurposing, absolutely.
And you said that commercial follows residential. At what point does a housing market or housing shortage, at what point does that impact businesses trying to move here, or does that?
There is some impact, because as businesses move in here and you talk to the economic developers, I mean, those are the questions that the business development or these companies are posing to these states, is like, hey, yeah, you're a tax-friendly state, but you don't have the housing or the workforce to support our business. We're not going to move here. And so, you know, that's why you've seen like areas like in Texas, for example, that have seen tremendous amount of growth over the years, not just based off of their business-friendly climate, but you know, they have a huge workforce that people can tap into. Education is another factor of, as companies look to relocate out into Arizona, they're looking at our education system. Is this going to support their workforce? Because think about it from a business perspective, is if I'm going to pick a location, it's not just going to be based off of the principles of money. I have to have the labor force that's going to be able to support my business initiatives. If I don't have that labor force, I'm not going to make that move there. I'm not going to make a linear move. You know, like some of the different types of companies that we're talking to right now, they have a labor shortage of qualified labor, and it's very concerning to their business. And so they're looking at Arizona because of the strong engineers that we have out here with Intel and some of these other chip manufacturers, Boeing, and some of your defense contractors, that there's a pool of labor that out there that they can move their company in, they can tap into, because they've exhausted their resources already. And so they're looking at how they're going to support their businesses. And so that's where they're making their decisions. Housing absolutely has an effect of that, but that's why you're seeing pressures from the cities of allowing more of a higher density based product. So you're seeing some more starts on the multifamily. Certain municipalities don't want multifamily in there because of their crime statistics and so forth like that, or whatever their objectives are as a city. You know, there's so many complexities that go into so many of these different issues. Some cities have demographic issues with an aging population, and so they're trying to change that to, you know, to youngify their, I'm going to make up words here, youngify their labor force that can attract labor into and attract businesses into their cities, so they can, you know, build off of that.
Speaking of youngify, I think Sharon had a question.
Yeah, I sorry. So I'm going to backtrack just a tiny bit here. Lots of stuff. You know, it is fascinating to hear about all the outdoor mall type concepts and things going on here, and how the malls, you know, would withstand with all these small stores, you know, through COVID and all that. One of the biggest projects that I know going on here right now too on the outdoor space is Paradise Valley Mall, which has been in talks for so many years of something happening there. And then finally COVID happens, and all suddenly now the mall's getting like demolished and all that. Do you have any update or know anything of other details of that project at all?
I don't. Mainly just because I haven't really followed that. That's not one of my sectors. I mean, there's so many disciplines in this real estate, and to kind of know everything that's going on with a specific project out there. Can I find out? Absolutely. I'd be happy.
Yeah, no worries. I was just curious. I'm kind of putting you in the spot on it. You know, and I was laughing when you were talking about the small space having multiple contracts coming and stuff. And I was going to say to you, that's because they're moving into them to live in them.
That's right. That's right.
Yeah. So they need somewhere to go. They're like, hey, I can get one of these and I can run my business in here at the same time. This is perfect.
That's right.
Well, and so Paul, maybe you can chime in a little bit on multifamily as well. I want to make sure we cover that before we move in, because, you know, it's funny. So I live in the Southeast Valley. I drive around and I just like, who's filling all these apartments? But I know that there are people already lined up, but these apartment buildings that are going up near Santan Mall, along the 202 corridor, down Arizona Avenue, I'm just like, it is amazing to me how many multifamily 3-story apartment complexes are going up. So what's it looking like for demand around that, Paul?
From the rental market is strong and it's going to continue to be strong. A lot of these they call them BFRs, so it's built for rent, that these developers are building out, where you are seeing a lot of these apartment complexes being developed. It's going to be all about selling the experience to people, and people are willing to pay for that experience. And these properties that are being built out, as I mentioned before, with not only them being energy efficient, but it's also going to be about the amenities. And as you know, over by Santan Mall, you have easy access to the mall. You have easy access to Top Golf. You have easy access to restaurants. People will be able to walk within a 10 to 15 minute radius and get to absolutely any and everything that they need to get to. So they're placing these properties strategically, obviously, in places where they're centrally located to everything that people need. So again, it's going to be about that experience, and people are willing to pay for that experience. So from the multifamily and rental market, you are going to see prices still continue to increase because, again, people are willing to pay for that.
This has been such an interesting conversation on the residential side, because we do need housing for people. I mean, the truth of the matter is we do not have enough houses for people to live in. And no matter the conversations we have about if businesses are going to come, if businesses are not going to come, I mean, obviously that all has really long-term impacts on our local economy. But in the short term, 50% of the people could decide that they couldn't buy tonight, or 50% of the people could decide that they're not moving to the state anymore, and we still don't have enough houses for people. So all of these changes in the short term are not impacting the fact that we don't have enough. So these apartment complexes are so interesting because on one hand, we really need them. We don't have enough houses. We've got to build up so that we can fit as many people in there as we can, because even if we use that same space and build houses, it's not enough, right? Then on the flip side, though, they're creating this culture, if you will, of this pay for experience, right? I went into an apartment complex the other day, and it's like there was a Starbucks in the lobby, and the dog park was in the the downstairs area, and it's like, people are paying for it, but then try to sell home ownership to somebody, and you're like, hey, you will pay the same, right, or maybe a little bit less. But you'll have to replace your countertops, right? You don't have a Starbucks, you don't have a dog park, but if you'll just take a moment to think about the financial impact to your life, you will be creating wealth for yourself versus throwing away $2,800 a month each month and getting nothing to show for it, but access to Starbucks and a dog park. But it really has forced us to have better conversations about what building wealth through real estate looks like, because the flip side is, I mean, it's very attractive.
Mindy, you brought up a good point as far as having the financial education behind it, which I think as a whole, there is a huge lack of that, where most people who are getting into rental properties are purely viewing it from a standpoint of, I don't have to replace my countertops. I don't have to fix my roof. My landlord is going to do that. So I'm just going to pay for this rental. And when I'm done, if I don't like it here, I'm going to go to the next space, where the conversation, to your point, should be, hey, why don't you own this property? There are huge benefits on the back end of this as a business owner and potential investor that you can reap the reward of. And not just that, but now you can become a landlord and reap the benefits of having home ownership and having a tenant pay for your property, just like you're doing for someone else. So I think it really is a matter of financial education and just educating, getting the knowledge out there that there are massive benefits to being a business owner and investor. Yes, you do want to pay for the experience now, but this experience isn't going to create wealth for you in the long term. A lot of people are living for today, which, you know, if that's your choice, so be it. God bless you. But if you're educated and you are young, and if you can look at this time frame now and project 20 years from now to be able to look back on this time frame, you will be far more well off if you start investing now rather than just living for the moment now. So, you know, financial education and educating people on the bigger picture, I think will have a far better return for people. But it's a matter of people have to take action and buy into it.
Well, and I think the flip side is true too. Those big fancy apartment complex still isn't addressing the hardest hit population in our housing crisis, which is the lower end.
100% agree. Affordable housing is a huge problem.
A huge problem.
Yeah.
And I just wonder if the commercial space, you know, we used to see those companies that would come in and do subsidized housing where they would create new houses, right?
Sure.
Or, I don't know if we anticipate seeing any partnerships on the commercial side for those kinds of things.
Yeah. So, you know, I've sat on a couple of different boards in regards to affordable housing because that is a huge issue. And how you can repurpose some types of non-performing commercial assets that exist out there, how you can take that square footage and turn it into some type of a housing development that would be for affordable housing, or as they classify it now as workforce housing, because affordable housing has a negative connotation to it. But the fact of the matter is homelessness is still growing at a very high rate. There's no anticipated change there. Cities are being heavily impacted due to this. It's just is eye-opening. I highly suggest anybody that has the capability and time to do it is participate in some of these affordable housing summits and so forth, and what the cities are trying to figure out to solve for, because it's a huge strain. And the problem is when you talk about affordable housing, these are all the service people that support us as just normal people. I shouldn't say normal people. That's horrible. That's not the case. They're everyday people. You know, there could be a waitress. It could be the dry cleaner. It could even just be a business owner, right? Because a lot of business owners don't make as much money as their employees do, and so there's a lot of constraints on the everyday person. And so I think that, you know, to your point, you know, that's one of my initiatives that I'm passionate about is how we can repurpose some of these non-performing properties that exist out there, because you can drive throughout almost every town throughout the city and state, and you'll find non-performing assets out there. They're not hard to identify. There's a lot of vacancy. There's nothing in the parking lots. They have these huge parking lots that are built for these parking counts that aren't applicable anymore because the business models have changed so drastically. Those areas can be repurposed for a very high density type housing. The challenge always becomes the cost of development and the cost of construction, and how do you as an investor make a return? Because, you know, if you're spending money, whether you're a nonprofit or for profit, you're always for profit. You have to be able to cover your expenses and pay your people to support your operations. So, I mean, these are these have very strong impacts into our residential, have strong impacts into our commercial on how we address these issues. So, yeah, it's very problematic.
Yeah, Sharon, did you have something?
I know we're short for time here a little bit, and we've got some updates, but interesting concept though you were talking about on the apartment complexes and Mindy, when you're talking about the amenities and stuff. I almost feel like they're creating these apartment complexes that someday could be converted into condominiums, because
100%,
honestly, they're beautiful. I mean, I've been in several people that are renting right now in Scottsdale Quarter and stuff. Some of these things are outstanding facilities, and just like you said, Mindy, and with the amenities, and could easily be where they could sell those units and people would live in them, and they wouldn't be rentals. So I think it's interesting how we transition that a little bit.
That is the exit strategy for most builders, Sharon, is even though this starts off as an apartment complex, the end goal is when it starts non-performing for them, then they start selling them off as investment properties. So yes, that's absolutely right.
Okay, you guys, I feel like this is so funny because this is so reminiscent of the conversation we had in the office, and the fact that like we could go on for hours and continue to kick these things around. That said, we're going to have you back, because there's a lot of things that that we all can learn from, and we can all benefit from knowing these things and the impact it has on the residential market as well. So so thank you for everything you guys have shared today, and I appreciate it. And we're going to need to make a little pivot over here to Annette, but thanks again. We're so excited to be able to learn from you gentlemen. So, okay, Annette, Nearly Free Money Hunt, what you got going on for us, girl? You got us some lower interest rates. What we got happening this week?
Oh my goodness, it's been a roller coaster ride since like mid-February, so it's been pretty exciting. A little on edge. But we're driving through it really beautifully right now. We'll see what happens in the next month or two, but right now things are looking great. I did want to say something, Tony, too, about the affordable housing aspect, and it's not like there's not a lot of people that would be in that price range. I'm qualifying people every day. It's just the affordable housing just isn't there for them. So, anything that I can do to help out on that front, I really truly believe in that, especially for home ownership. And it's a struggle right now for a lot of clients. So I agree with that wholeheartedly. So, but on that front though, if you find a house and you're looking for the best interest rate, they're starting to come back down again. So I'm getting kind of excited. I'm going to share my screen. Now, how long is this going to last? I have zero clue. I was wrong about not seeing twos again. And guess what? We're about to see twos again. So it's been really, really fun in the mortgage space lately. So you can see this chart. You'll see this chart right now. So back in February, if you look right here, it was roughly February 8th, 12th, roughly around there is when our rates started going up. So here is when we had the biggest one-day drop. This was roughly what you would consider 100 points. So this big, long, red line is roughly 100-point drop. But then the next day, it came right back up, and slowly and steadily, we've rode a wave down. Now we're on a wave back up, and this is mortgage-backed securities. So what we're looking at right now is mortgage-backed securities. So as they go up in the charts, that means our rates are coming back down. So we've kind of hit this line of resistance up here at 103.75. If we go above this line, I really feel like we might have a little bit more of a wave up, meaning rates to come back down a little bit more. So it's been exciting lately. There's this little wave that was giving some people some panic attacks, on the way down. But now our mortgage backs are coming back up, which is a good sign for rates. Down here at the bottom, you'll see these two little lines. You've got a red line and a black line. And they've been crossing over each other. So this is the volume of what is being purchased right now inside of mortgage-backed securities. So the higher the volume, the more likely it is to come back down a little bit. So I would not doubt that we'll see a little bit of a pullback down to this black line here. And then we might ride another wave back up. So it'll be interesting. We'll see what happens over the next few months. even the next couple of weeks. So if you are in the market to purchase and you are still looking for a house, I'm praying that you get your contract accepted. And if you're looking to refi, there's still no better time to refinance.
So what's driving that, Annette? What is driving the increase in the purchase of the mortgage-backed securities?
You know, right now, I used to be able to give you a straight answer to that. Right now, I don't really have a good answer. The only thing that I can really say is that the COVID testing results have come back up in other parts of the world. So I think that that's having a bit of an impact in people buying our bonds. So like the 10-year bond and mortgage-backed securities. Our employment keeps going down, like it keeps going down. So the rate of employment keeps going down, which is a good thing, which would impact rates to go higher, which would then drop the mortgage-backed securities. So for this to be happening, it's kind of a mixed bag. This week, we haven't had a lot of economic news. In fact, they said that this is the only week out of the whole year with the lightest economic news and impact to the market. So I would see that we'll probably go across in a straight line for a little bit. But yeah, I mean, that's the only thing that I can contribute to right now is the increase of COVID positive testing around the world that's holding this. I saw a news story about that this morning. So
hey, Annette, I had a question about refinances. What is the typical qualification right now in today's market for self-employed or 1099 people? Because I know ideally it's a W-2 is what most people look for, but for those of us who are 1099, what are the qualifications that most people are looking for in order to get a good refi for their properties?
Well, depending on the product and the program, for self-employment, we're going to be looking for your tax returns. If you have a higher credit score, so if you're in the 700s, most likely, as long as you've been self-employed for the last 5 years with the same business, we'd be looking at a conventional loan and gathering 1 year of tax returns and 3 months of bank statements. If your 3 months of bank statements does not support your current year-to-date P&L, then we would have to get an audited P&L. That's always something that I look at right up front before we ever get into processing and then into underwriting, is to make sure does your P&L support your bank statements? If not, let's take a look at a different avenue, such as an audited P&L, to help support the actual tax returns and the income that you've been having over the last 5 years on the business. Jumbo's a different story. So if you're looking at refinancing and you're in a jumbo realm, it's 2 years of tax returns, it's your P&Ls year to date, and I would say definitely get an audited P&L for the jumbo program versus supporting it with 3 months of bank statements. Obviously, I'm going to make that determination once I see it right in the beginning. So that way, you know, I can say, okay, 3 months of bank statement is going to work. Or, you know what, let's go a different direction. Let's take a look at an audited P&L and let's go from there. So go ahead.
One more quick. When you say an audited P&L, does that just mean having a CPA do that? Is that what that means?
Correct.
Okay.
That's correct. Okay. Yes. So typically your CPA is going to do just a quick financial look at your current year-to-date P&L. They're going to match it up with your assets, and then they create the audited P&L for us along with their statement attached to it.
Yeah. Thank you. Thank you.
Okay.
All right. Annette, thank you. We appreciate it. We always appreciate the fact that you like to lower the interest rates before you come on. So that's a great service to the entire real estate world out there. So thank you for that. So all right. Well, Mindy, so Annette's held up her end on lowering interest rates. What are you doing for us on inventory?
It's not fair, Don. It's just not a fair position to put me in here. I cannot go out and build 50,000 houses in between each market of the moment. And so it's just not a fair position to put me in. But I will give you some updates and let you know what's going on out there. The good news is that even though it is challenging out there, there is still a huge reason for you to be buying and selling properties right now. It's a huge reason to be investing. The upside for you from a financial perspective is massive. It's not going to be like this forever. So even though I'm going to tell you that there are still definitely some challenges out there to getting it done, there is still a reason for the challenge, right? What you don't want to get into a position is there's a challenge with no benefit. So right now we're seeing 54% of sales closing over asking. The average valley-wide is about $15,000 over asking price. Although I can tell you I listed a house last Friday at $860,000, and we are going to be closing that house at about $50,000 over asking price. So 50. So even at that price point, you're seeing a lot of that. What that's doing is that's really escalating the rate of appreciation that everybody in the area is seeing. So instead of one house selling and the next house selling for the same amount, or maybe for 1% or 2% higher, even $5,000, $10,000, whatever it might be, it's selling for a dramatically higher price point than the last one, and therefore it's setting the new comp for the neighborhood. And so that's happening at such a fast rate that we've actually seen 13% appreciation in the last 4 months. So if you take 13% of appreciation over the last 4 months and you annualize that, meaning if we stay on that same trajectory, we will be getting at about 40% appreciation annually. So if you think of that in a house that you've purchased, right? I mean, it's wild. I mean, that's really 4, maybe 6 even years of appreciation from living in a home. So again, if you can meet the challenges to get in today, what you get in return as a buyer is something that most people will never experience in their lifetime. And so we've got to try to continue to do everything we can to be creative. We know that our sellers are continuing to sell quickly. They're still able to ask for lease backs. The luxury market is still on fire. Sales over $1 million are actually up about 56% year over year. So there's a continued demand for luxury properties. So we're really continuing to see this at all parts of the market. The market that struggles the most is, as we've talked about several times today, the lower end of the market. Prices obviously have just risen so quickly, and the folks who typically have less money to come into a transaction are those first-time home buyers. If you have a home and you have the equity, you're in a great position, right? And you should definitely get that ball rolling now. If you don't have the equity, that's where you're finding the greatest challenge. Now, not only are you finding the challenge because the prices have risen, but your competition is really strong, and it's not just from your neighbors, your friends, your family, it's from institutional investors and our iBuyers. So we've definitely seen, I can tell you just from working right in this area, I've seen a huge shift in iBuyer buying activity. I'm not talking about the number of houses they're buying, I'm talking about how they're buying. So, a lot of our sellers are wary when they see offers come in from some of our iBuyers or some of our institutional investors, because they've gained a reputation of coming in under market value or coming in with one price and then having a bunch of, hidden, if you will, fees, or maybe coming in the inspection period and asking for much more than, a traditional buyer might. We're seeing a complete shift in that. I can tell you in the inventory that we have at the Amy Jones Group just over the last few months, we've closed 2 deals with Progress Residential. They've come in, they've paid well over asking for the properties, all cash deals, closing in very, limited amounts of time, no asks in the inspection period. We've closed an open door cash backed offer where you have a buyer who comes in. If the property appraises, they're able to move forward with the transaction. If it doesn't, the buyer becomes open door. So your seller closes as normal to open door, and then open door has a program of which they go back to the buyer to attempt to get the inventory back into their hands. We've seen open door offers in general just come in more competitively. I have a house that's on the market. We just under contract today with an open door offer. It's over asking price. And the property has been on the market for it's a week. I mean, not a long time, but it's not a first day offer. And so it's really interesting to see these changes in buying patterns. And that's really a signal to our buyers out there to say, hey, if these companies are willing to pay over asking, there's a reason, right? There's a financial benefit to them. And a lot of them in the short term are using them as rentals. And then as the market starts to shift, they can determine what they want to do with their inventory. But it's a huge signal to buyers that if these companies are coming in and trying to buy these properties, there's probably a financial benefit to doing it. And so if you're concerned that it's not a good time because prices are going up, you need to be looking at these other signals, right? And this iBuyer activity is really a big signal for us. So I think one of the takeaways there too is that none of these solutions can really be done as effectively without a real estate agent. That open door offer that comes in, that's coming into an on-market property. That's not an off-market property. That's not where you go direct to them, put in your property address, and they give you an offer. That's not what this is. These are offers to properties that are listed in the MLS with the MLS photos and the video and the representation, and you pick the price, right? I mean, they're coming in at that point where your agent has already been able to put your best foot forward. So I think it's really important that people don't confuse a hot seller's market and the fact that you could sell your house to anyone with actually maximizing what you're able to make in your home. So I just think we've seen that lesson time and time again. At the house that I mentioned that we sold $50,000 over asking, that house had been listed in the coming soon in MLS for over a month, but without professional photos, without professional video, as we were waiting to get it prepped. And then we really prepped and staged the home and put it on the market, and we had multiple offers and ended up over asking. So those things do still matter in this type of a market, and I think that's a real key takeaway right now.
Absolutely, yeah. I think that it just all goes back to, and we talk about this every week, Mindy, but the importance of having a real estate professional on your side, somebody who understands, you know, and Sharon and I talk about this often, that we end up, you know, in these conversations where all these things just become just part of our life, right? And we don't always look at things from the consumer. It's easy, I should say, to not look at it from the consumer perspective. And the fact that you know, you guys take the time to educate people, walk them through these things, because, you know, I mean, competition is going to get you your best opportunity on anything that you're doing. So, so you guys are amazing. And I think that's great that you guys are looking at these different options and helping guide your home sellers and your buyers through that process, because there's so much to be said around all of that. So, thank you for sharing, Mindy. We are starting to run out of time here. I do want to mention, you know, one of the things that we are all looking to do right now is to gain more listings. And if we can get our own hands-on inventory, it helps any agent who's proficient in this business at growing their business. And so while, you know, there's a lot of challenges right now for getting buyers into homes, that, you know, again, it's a lot about mindset, and it's a lot about, you know, making the choices to do the things you need to do to get those folks into a home. But listings right now are really powerful, and if you have the opportunity to gain those, that helps you run your business. So I'm putting together an event next week where we are doing a call session. I'm providing lists of homes that are likely sellers, or you give me an address, I'll give you a surrounding area of likely sellers, and we'll get you the phone numbers, the email addresses. We're doing script practice. We're having all these conversations ready. We're actually even taking it another step and matching it with some of the institutions that Mindy's been referring to for what their offers would be on those properties. So when you're calling on those, you actually have an offer opportunity for that homeowner. If you'd like to be a part of something like that, if we've got one next week. If next week you're not available, we're going to be doing a monthly around the valley, and we would love to have you involved in this. You know, if you don't have a specific area, and if you want a really hot list, I can get a list from these institutions of the homes that they want to buy, and provide you that list with phone numbers and email addresses. So so whatever works best for you, you know, we can make that happen. So reach out if you're interested in getting involved in one of these call frenzies. We're scheduling them around the valley right now, and it's going to be a lot of fun, a lot of camaraderie with people who are doing the same thing. and just the opportunity to learn. Paul and Tony, we've done one in your office before, and these things have been a lot of fun, and it kind of takes the edge off of that whole like, oh my gosh, I have to make this phone call. So.
Yeah.
So thank you, everybody. Appreciate you. Appreciate all of your time. Paul and Tony, we're going to have you back because I feel like we just scratched the surface today. Annette, thank you so much for your insight. Mindy, always great information about what's happening in the market. And Sharon, thank you so much for what you bring every week to this great show. So thank you, everybody. Looking forward to seeing you guys all next week. Bye-bye.
Thanks, everybody.
Bye. Thanks, Don.